Welcome to the May 5th, 2025 Cinco de Mayo Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Today's program, Stealth Recession. Run in circles, scream and shout. Every time there's a recession, it's always going to be bad. This may be a stealth recession, and I'm about to show you why. The official number for the first quarter came out this week. Minus 0.3%. The whole thing was caused by two contractions. Government spending, which is in GDP. They ought to have a private version because we're going to cut government spending a lot, and I'm going to cover what that means for the future announcements so you don't get led astray by headlines that are driven to scare you. Now, the second part of this is what's actually happening in the economy right now. Net exports were positive. Net imports for the first quarter, way negative, right? All these goods, all the Chinese-made rubber duckies and Buzz Lightyears came into the U.S. anticipating there are going to be Chinese tariffs and the price of a Buzz Lightyear doll is going to double, more than double, and Sheriff Woody too. So all of those imports drove it to a negative number. But the rest of the economy was healthy. And I've got two other numbers for you so you don't get led astray in the abyss of pessimism and miss some bargains. 1.1%. This is the Atlanta Fed. You go Atlanta Fed, real GDP now, you can get it anytime. They update it every week. April numbers, preliminary growth is 1.1%. That's not huge growth, but it's on the positive side. Jobs for last month. 177,000 net new jobs. So the economy was just fine. And there was a contraction in government jobs. Well, the government reductions that are targeted are going to have a big impact. And you need to be aware of this. This is usdebtclock.org. By the way, thank you for tuning in. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. We serve affluent families right here from the Crescent in Dallas. Find us at NetWorthRadio.com, and you can set your time to update your plan for tariff chaos and what's actually ahead for 2026. Part of that, Doge Clock, $384 billion in identified savings so far, right? Now, the target is $1 trillion in savings. $1 trillion. $30 trillion economy, divide that into a trillion that goes to the minus side, reduced spending, that's minus 3.3% on GDP. That's called a stealth recession. Government's getting smaller, inflation likely to come down, but the headline number, like the first quarter, is likely to be negative. Anyway, this is a great site, usdebtclock.org, and you can go there for plenty of entertainment. There's the $37 trillion debt bomb. Wow. Budget deficit, $2 trillion. That's unsustainable. Take $1 trillion off that. As soon as that number starts to drop, you're going to see some positive effects in the credit markets and the bond markets that we're poised to take advantage of in the portfolios. Great yields right now at 7%, 8%, 9%, 10% that could benefit when the government stops competing as much with the private sector for capital. This week, the Dow Jones Industrial Average back over 41,100. Wow, even though there was a technical contraction in the first quarter. What happened? I'm about to show you. Deficit for the year, the Dow's only down 3%. It's not so bad. Tech stocks down less than 5%. After their little Friday bounce. What happened? Microsoft and Meta Facebook had great earnings. Wow. And Microsoft turned positive for the year, even though they're part of the Magnificent Seven that got decimated by as much as 25% in the initial bear market. Why would that happen? Earnings. 70% of the S&P 500 reporting so far, 13% earnings growth over last year. So you got tariff chaos, tariff disruption. They're pulling forward guidance, but you look at the headline numbers, everything is just fine in terms of corporate earnings. It's going to get disrupted, and there'll be some tariff disruptions while they're working this out and coming up with something coherent. So you'll see wonky inflation numbers and GDP numbers that might be discouraging, but don't lose faith. There's plenty of great bargains out there. Let's talk about your house here in North Texas. That's a reasonably large part of everybody's net worth. Well, Dallas is interesting. The nation grew at 3.9% over the past year. Price of homes went up nearly 4% across the nation. Dallas only 1.6%. Why? Less regulation and more supply. Great builders like America's home builder D.R. Horton, based here in North Texas. But look at this. You stalled. The middle of last year, home prices stalled. Now this is national, down minus 0.24%, but up 3.9% over the past year. So housing market has stalled. Now, your house in North Texas, it is also peaking last year. You peaked in price. I guess you should have sold then if you were going to sell. Now we're down 2.6% from that peak because North Texas has a great supply of new homes, and people are buying more new homes than anything else. 177,000 net new jobs tells you this economy for now is just fine. And when you get those huge dips, McGowanGroup Wealth Management will be in there buying the bargains with a portfolio designed to pay you lots of cash flow. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.